We're joined by Pippa Malmgren of Principal's Asset Management. You're going to be talking at INSEAD at a private equity function. You've spoken to us in Abu Dhabi as well as Singapore. There is a major problem at the moment with national debt. How do you see this playing out?
Well, I think it's important to understand that the bailouts that Western governments engaged in during the financial crisis effectively took the holes in personal and bank balance sheets and moved them onto national balance sheets. So we still have to pay down that debt. And the question is, how is it going to be paid? In some places, they'll actually say we have to pay. This will be very painful for the public, and this is why we see tear gas being used in Greece. As the public begin to register, wait a minute, this means I have to take a lower standard of living, retire later than I expected, fewer public services, and they're mad about it. But Greece is not the only country that faces this issue. This will be all Western European countries and the United States as well. Another way that you can get out of the debt problem is you choose to go down the inflationary path. And that is effectively what Western governments have chosen. They have said we're going to create as much inflation as we can to pull us out of the ditch of deflation. My concern is that once you're out of the ditch, the chairman of the Federal Reserve says, then I promise I'll kill the inflation as soon as I see it. I'm not so sure we can trust our officials to do that, given how much pain is involved in actually paying down that debt.
You mentioned that governments are encouraging inflation. Is that primarily through interest rates?
Well, I think it's a combination of things. We're effectively seeing governments devalue paper financial assets. Cash by printing money, bonds by issuing more bonds, so each one becomes less valuable. So naturally, you would expect from that devaluation process a couple of outcomes. One is people start to move into hard assets, and we see a bid for hard assets in the world economy, from private equity to the asset allocation of pension funds and sovereign wealth funds looking for more inflation protection. But we also see inflation starting to occur in the system. This is a very controversial view. Most people think that deflation is the only risk we need to think about. My personal view is when 99% of the market thinks deflation is the only risk, you better look at the other side. And we already see the inflation. Think of it this way. With the credit crunch, you destroyed a lot of the excess capacity, particularly in areas where you extract from the planet, so food, agriculture, energy, mined assets. And these are exactly the areas where we see the prices starting to lift because, of course, the few left standing raised their prices. So food inflation is already hitting the emerging markets. China, India, the central banks are having to respond. The Reserve Bank of India has been raising interest rates more aggressively than anybody anticipated. In China, the inflation rate now outpaces the deposit rate. So you're losing money every day you have your money on deposit. In the Western context, I think this inflationary pressure comes in a different form. The higher input costs squeeze margins. So now what you want is branding, pricing power. So I think it's going to put a bid on M&A activity in the West as companies try to acquire that capacity to both negotiate down the input costs and pass on the higher input costs. So very different outcomes in different locations, but all driven by higher input costs, which is an inflationary pressure.
To return to the national debt issue, how serious a problem is this for Greece?
Oh, well, I think it's a very serious issue for Western Europe. This is not a Greek problem. It's a Western European problem. We have exactly the same set of issues in Spain, in Portugal, in Ireland, in Austria, and in the United Kingdom, and in the United States. The capacity of government to manage this process is what's in question. So, for example, in Latvia some months ago, where they have exactly the same issue, the government announced that the public sector would take a 20% pay cut. The Latvians basically went home, they had a drink, and they went to bed. In Greece, you need tear gas to disperse the public. You're going to get different public reactions in different locations, but the fundamental problem is the same, which is that the burden of that debt has to be paid by increasing GDP, either by working harder or getting less. And that's where the public, I think, is just starting to register the problem. And the fact that the media present this as a Greek problem is a terrible mistake. This is a Western European American problem.
In the US, we've seen the SEC go after Goldman Sachs. What's your reading of this situation?
Well, again, I think it's connected to, we got to go back to the financial crisis and the fact that the losses in the system were so great that public taxpayer money had to be used to sort the problem out. And now the public's beginning to understand they still have to pay for those losses. So usually when you go from a boom to a bust, and the public has incurred a loss on this kind of epic scale, you get what might be called the recrimination phase of the economic cycle. And this is where politicians feel the need to step in and be seen to be doing something about whoever caused the problem so that the public is protected from this ever happening again. And this takes many different forms. One of them is the recent announcement of charges against Goldman Sachs, the charges against Galleon, a hedge fund in New York, the Bernie Madoff case. All of these are examples of a kind of need in the public to go after the financial services system because that is where the problem occurred, and try to resolve it in a way that they hope this won't happen again. The problem is that each financial crisis is different. So usually what happens is once you address yesterday's problem, you're going to get a new phenomena tomorrow. So, but this is exactly what happened in the 1930s after the crash of '29. It's what happened after Enron and Tyco with the passage of Sarbanes-Oxley and the prosecution of the leadership of those firms. This is exactly the same pattern.
And so you're seeing it as being politicized?
Well, I mean, I think it's naturally politicized because you can't have the general public, whether it's in Greece or in the UK or in the United States, incur the kind of losses that mean that people have to actually take a lower standard of living without a need to redress that in some way. Now, there are smart ways to address it and redress it, and there are not so smart ways. Once politicians get involved, the not so smart ways start to be pursued. But that's because it becomes populist. I would prefer that we didn't deal with this in a populist manner, but it's inevitable. It is an inevitable part of politics, in my judgment. And of course, in the US, we're just coming into the midterm elections, and there are votes to be had in this issue.
You're going to be talking to the MBAs about private equity. What's the outlook for private equity?
Well, I have a pretty strong view that we're entering a real sweet spot for private equity, which is ironic because, of course, there have been lots of losses incurred in private equity investments through this financial crisis period. But I think one thing has changed on the landscape. This new environment means that private equity deals need to be driven by actual owner-operator skills. You need to be able to make the asset or the company actually perform better. That means controlling your margins and being able to charge a proper price. That means also brands, again, become very, very important. In the past, private equity was really driven by financial jockeys who were all about looking at the math of the balance sheet, applying some leverage to it, and flipping it. This is no longer going to work because you can't raise capital to play those games anymore. Now you actually need the company to perform. And so I think people who have real owner-operator skills have just become much more valuable. And capital wants that because, again, this is inflation protection. One of the few things that can outrun inflation is the proper, genuine, unimpaired cash flows that a real business, a really profitable business can generate. So I just see it as a private equity, great area. Be careful, what are the skills of the people you're dealing with? Are they financial jockeys or are they owner-operators? I'm with the second crowd for the time being.
Pippa Malmgren of Principal's Asset Management, thanks for joining us.
Thank you.